Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I've never, ever said this before. How about making a book of the year, a book that's 18 months old and now 2 years old? Ruchir Sharma in 24 took every award for What Went Wrong with Capitalism. This is the book you throw at a 21-year-old brat. Paul, I'm talking to you. And you say, shut up and read this. Ruchir Sharma on the presidents here going to FDR, Nixon, Reagan, Biden, and on to President Trump. Ever more important 2 years down the road. I can't say enough about it. Ruchir, thank you so much for joining us this morning. If you were to write a new epilogue for What Went Wrong with Capitalism, how would you write it?
Well, Tom, first, thank you so much for your kind words, because nothing warms the heart of an author more than to hear it from someone like you. But yeah, that's exactly been the aim of this book, which is to sort of show that how the capitalism we have today is a very distorted form of capitalism we have. Can we even call it that? And the main reason I wrote the book is something that you teased just now in your introduction, which is that so many young people today, when they are polled in America, say that they are disillusioned with capitalism. And in fact, many of them, particularly progressives, say that they would rather have socialism. Now, that tells you about what is the disenchantment with the current system that we have. And what I've tried to do in the book, and I don't think I would change anything from what I wrote about this 18 months ago when it was published, is that we've seen more of that, which is that we're seeing much wider income inequality, wealth inequality, and we are seeing a lot of the incumbents get much more entrenched. And my point is that capitalism is not supposed to work this way. Capitalism is supposed to be pro-churn, it's supposed to be pro-competition, and we are supposed to weed out a lot of the old players rather than have this kind of system where you get sclerosis.
That's right where I wanted to go. Weed out the old players. Post-Trump, whatever your politics, folks, I don't care. Ruchir's great about that. Post-Trump, what happens to populism? Is all of this solved at the ballot box?
Well, I think that, the main issue that Americans have today is one of affordability. And the affordability crisis that we are facing in America, a lot of that comes because of home prices. And that goes to the heart of what went wrong with capitalism. Why are home prices so unaffordable for so many Americans that so many 20-year-olds today cannot afford to buy a home and are preferring to living in with their parents? Well, the main reason for that is that the amount of regulation we have had in the system, that has made home supply in very short supply, in fact. So the number of new homes we are building in America today is roughly the same level as it was 30, 40 years ago when the population was a lot less. The kind of regulation we have today makes it very difficult to build new homes. So demand keeps going up, but supply just doesn't come on the market. So I think that this is what we need to do, that how do we get capitalism back to functioning the way it was, closer to what the founders had in mind. I'm not saying we return to the Dixonian form of capitalism that we had pre the 1920s without a welfare state, but this capitalism where you have, at least for the rich, capitalism on the upside and then socialism on the downside, where the losses are socialized, the government's there out to protect you. I think that distorted form of capitalism is something which will keep producing these perverse outcomes that we're getting today.
Across America, Ruchir Sharma with us, of course, chairman at Rockefeller International. Can't say enough about his work, including my book of the year, What Went Wrong with Capitalism. Paul Sweeney with Ruchir Sharma.
Ruchir, I think we all grew up, most of our listeners and viewers, with globalism. Is globalism dead these days?
Really, because if you look at what's happening in the world over the past year, that yes, that America is withdrawing from the global trade system, but the rest of the world is learning to trade without America. So if you see what's happened to trade volumes over the last few quarters, that America's share is declining in global trade volumes, but the rest of the world, the trade volumes are actually going up. And as I travel the world, what I find is that more and more countries are trading with each other, signing trade agreements with each other. Europe and Latin America, even countries that had turned quite protectionist like India are signing more trade deals, with the Middle East or with New Zealand. So at least on the trade front, what I find is that globalization outside of America continues. Now, of course, where globalism is more imperiled has to do with immigration. And this is one of the top trends of my year, that we are seeing this backlash against immigration, not only in America, but across the Western Hemisphere. So therefore, immigration rates have collapsed in much of Europe as well, not just in America. But as far as trade is concerned, the world is really learning to trade without America increasingly.
China, that's one of the big wild cards, I think, as we think about global trade here, Ruchir. What's your view on China and the West over the next several years?
I think the single biggest story of 2026, which could emerge, is the fact that China's dumping is causing so much pain to so many countries around the world. What exactly is going on here? Which is that China is always known to be an export powerhouse. But over the last decade or so, this is beginning to shift in one very important way. In the past, yes, China would export a lot, and it would also increase prices over time. Last few years, what's begun to happen, and this has become more acute in the last couple of years, that China's export volumes have surged, but it has done so by cutting prices. So right. Chinese export prices are declining by 20% a year, whereas export volumes are surging by 40%. And that is leading to a flood of Chinese goods around right. the world, which is hurting the manufacturing sector in places from Europe to Southeast Asia. And I suspect that backlash will really become more intense in 2026, because a lot of these countries were so focused on fighting Trump's trade battle in 2025. But that seems to have peaked. Now I think the attention is going to turn to what China does. Right. And I think that the backlash against this China dumping is going to get pretty intense this year.
Ruchir Sharma with us, the Rockefeller International, celebrating his top 10 trends for 2026, published, of course, by the Financial Times. Ruchir, you got a beautiful sentence here, and I just want to get to this for 26, for 27, for 28. Until the money dries up. What's the Ruchir Sharma timeline? Asking for a friend, Ruchir. What is the Ruchir Sharma x-axis look like for, quote, until the money dries up?
Well, I think that the world is very sensitive to higher interest rates. I know that some of the previous guests are forecasting lower interest rates this year, but I think that the real surprise could be that by the end of this year, we get higher interest rates, particularly long-term interest rates. And when interest rates go up, that's when money really starts to dry up. So I think that what you're alluding to here, Tom, is the fact that I wrote that we have some sort of an AI bubble, but the bubble can keep inflating until interest rates go up and money dries up. I think that happens possibly by the end of the year, when you end up getting higher interest rates as inflation remains right. sticky, and the fact that we still have, like a lot of this liquidity propping up financial assets. But the moment interest rates go up, particularly long-term interest rates, that's when money dries up.
Don't go away, because Paul Sweeney's going to save me. Can you save me from this?
I can save you, Tom, because he's got 10 big themes for 2026. And number 10 jumps out at me. Peak alcohol. What's going on there, Ruchir?
Yeah, this is one of the things which surprised me too, which is the fact that when I looked at the latest Gallup survey of the pollsters asking Americans that how much are they drinking, and they've been asking this question since I think 1938 or something. The lowest share of Americans today are drinking alcohol than before, right? So which is that what you're seeing is that people's alcohol consumption is dropping. In places like UK, even Russia, alcohol consumption is close to a record low. So I think that that's what's really going on, which is that there's a lot of awareness about the negative consequences of alcohol. Even the old line, which is that a drink a day is good for you, I think that myth has also been busted. And so the a lot of young people in particular are turning off alcohol. And so therefore we see the consequences of that even as global stocks continue to rally, one of the worst performing subsectors in the world over the last few years have been alcohol stocks. And these include wineries, distilleries. So, we're seeing this across the board.
Right.
So there's a negative, sort of attitude towards alcohol, leading to lower consumption of alcohol. Some of it is getting cannibalized by cannabis as people switch to that. But I think that that's a small part of the story. The bigger story is that due to health awareness, people are turning off alcohol, just like they did with cigarettes before that.
We have Lisa Mateo to help us with that. Ruchir Sharma, my book of the year, What Went Wrong with Capitalism? Can't say enough about it. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
John Bilton had a global multi-asset strategy at JPMorgan Asset Management. We're thrilled you could be with us.
Thank you.
This morning. You nail the risk of disinflation and outright deflation. There is a raging battle now in the zeitgeist over if this disinflation is just lowering inflation or does it lead to dampened output in Europe and around the world. Does Kasman and Feroli, do they see dampened output from the disinflation you talk about?
Well, I think what it does is, having seen the ECB firmly on hold, probably for most of this year, suddenly some of the data we've seen in the past couple of days suggests that just maybe the ECB might have a midsummer gift for folks out in Europe. They've done a lot to bring rates down to what they are effectively close to zero in real terms. That's important. Remember, this is the biggest consumer bloc on the world. Apologies to American consumers. European consumer bloc is twice as big. They just don't spend. They save. So it's really important how it feeds through to ECB policy. The European households are saving 15.3% of their income each year. That's the savings
rate. And move the decimal point, we're saving 1.5%.
Exactly. Yeah. So the point is, but we just need a little bit of impetus to set some spending in train there. Europe can look pretty good. So these disinflationary forces give the ECB a lot of wiggle room. But remember, there's a lot of capex coming as well through into Europe over the course of 26, 27, 28 under the Made for Germany plan, but also on some of the defense spending, etc. That's yet to hit the system. So do we see a return to the bad old days of disinflation, even flirting with deflation? Probably not, because this is a different picture. We've got fiscal as well as monetary right now.
We had U.S. markets, equity markets perform very well in 2025, but rest of the world did a lot better. So what are we doing in 26? Do we expect that outperformance to continue?
So it's kind of an interesting one. There's been some real changes in terms of what's driven the equity markets. If we look at the actual indices themselves in local currency terms, they're kind of level pegging if we take developed markets versus US. Layer on the currency. And of course, this has been a great period. If you've been an American investor buying European, Eurozone, UK, Swiss, you've done pretty well because of the currency move as well. We think the currency's got a bit further to go, but the balance is changing. The differential over the long term in terms of what we see as dollar weakening against the euro, only about 50, 60 basis points a year. It could be 2% against the yen. It could be 2.2% on average over the next 10 years against the renminbi and the yen. So it's really the Asian markets where you're beginning to get that potential for that currency pickup.
This is what, John, I'm so happy you're here for this red sticky. This is what, when we do a fancy headline, Bloomberg, we color it red. Sweeney demands that. Alaska Air is buying 110 Boeing aircraft in global growth push. My currency is gloom. People don't tune in. They don't listen. They don't watch on YouTube unless, Lisa, am I right? Unless we're worried. What about our children?
Worried, yes.
We're worried. We're worried. Here's Alaska Air betting on global growth. I mean, what does your bank see of the optimists just saying, no, we're not going to worry about this. We're not going to worry about disinflation. Let's go. What's the John Bilton let's go meter right now?
Well, I think pair it back to basic fundamentals. If we look from 1970 through to present day, we can count the NBER recessions. We look at the economic data today, it is not pointing to a recession in the US, and we've got fiscal stimulus and monetary support in the rest of the world. Take a look at S&P total returns over those periods. In a non-recession year, 9 times out of 10, the S&P 500 gives a positive total return. So the idea that one would bet against the economic momentum today when you've got everything aligned, fiscal stimulus, regulatory easing, the lagged effect of monetary stimulus all coming together in 2026, I would be betting on equity markets continuing to climb a wall of worry and some of the investment spending from companies needing to play catch up in order to stay relevant in terms of a growing global economy.
Allocations, stocks, bonds, alternatives. 30,000 foot view, where's JPMorgan Asset Management these days?
So we're a little bit overweight equity. We're conscious that valuations are kind of peaky, but at the same time, we think fundamentals are good. We think broadening out is important. We're not talking about sort of going and playing around in small caps here. Mm-hmm. We're talking broadening out globally across some of those bigger, recipients of that capital spending. So broadening out, overweight equity. We like Hong Kong because of the Asia play. We like the UK because we've gone continuing to see some decent yield there. We like Japan. In terms of bonds, we're looking for further steepening in curves. The Fed are likely to cut rates, we think, one more time this year. And then in terms of the other markets, we're getting a little bit tight on credit. So we think it's probably equity over credit as we move into the latter stage of this.
Have you moved to New York or are you based in London still?
I'm based in London.
Damn. Can we take a note? Can you get Mr. Diamond on the phone? We need Bilton to come over.
Well, we'll just go over there. Well, we could go
over there. That's
go over there.
There are flights both ways.
I know a few pubs over there.
I didn't know that. John Bilton, thank you so much for joining us.
Thank you.
With the JPMorgan Bank. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is the most important conversation of the day because you're not paying attention to your 401k. Cam Dawson is. I haven't said this in ages. OMG rotation. What is the character of the rotation going on in the markets right now?
I think we have to appreciate it at the start of the year. We typically do see some of this last shall be first kind of rotation where the names that had lagged start to lead, at least for a short period of time. What's interesting is that actually started back in November. The rotation really kicked off in November because that's when we saw the blow off top and some growth shares. They traded to an 85% premium to value at the peak in October. So there was a lot of room for valuations to come in. And I think the character of this rotation has been one that's been very pro-cyclical. If you look at what's leading, it's things like banks, and you have industrials doing better, industrial commodities doing better. So it appears that this pro-cyclical rotation is coming with a narrative of global reacceleration, which I think remains to be seen if the data actually supports that.
Boy, I'm thinking about my inbox over the last, 6 weeks from the sell side and their 26 outlooks, almost universally positive, bullish, 10%, 12%, 15% expectations for S&P stock performance in 2026. That makes me nervous. Does that make you nervous at all?
There's not a single strategist who's expecting a down year in 2026.
Are you?
No. We expect.
Come on, I got to make some news this morning.
Look, we think that we'll have volatility along the way, but that there's still room for the markets to press higher through the end of the year. But the key point is that in the fourth year of the bull market, we've had 23 bull markets that have been 3 years over the last 50, 60 years or so. And the conclusion is about 50% of the time, they're able to get to that fourth year of positive returns. So we have a 50-50 chance of being able to deliver positive returns in 2026.
Earnings, I guess that's the good news for bulls out there because of the expectations are in 2026. Again, double-digit growth in earnings, 12, 13% growth in earnings. Is that enough to support this valuation, this market?
That has been what has supported the valuation through 2025. The fact that you saw the vast majority of returns in 25 driven by earnings growth, and that's expected to continue in 26. So if we break down the 2026 earnings number, it's $310 a share. That implies an acceleration in the top line. That's interesting because if you look at consensus forecasts for GDP, consensus is expecting a deceleration in nominal GDP growth. Remember, sales are nominal.
Yep.
The other important point is that you have over 200 basis points of margin expansion that's already being baked into current forecasts. So we think if we're thinking about what could drive markets over the course of the next couple of months, it's whether or not you take the over or under on that earnings number.
Cameron Dawson with NewEdge Wealth. We welcome all of you across the nation, including her Florida. We're doing Florida music today for Cameron Dawson. Do you know who Leonard Skinner is?
Oh, I was thinking you were going to go with Tom Petty, but yeah, sure.
Yeah, we have Tom Petty as well.
Yeah.
I just thought you were too young to know Leonard Skinner. Yes, folks, we're going to play Freebird. Get over it.
I'm more of a simple man.
Yes.
Yeah.
Okay. I look, Cam Dawson, at this equity market. I don't see the exuberance out there. I know there's Robin Hood exuberance and, Lisa's kids are trading on the couch, but it's not like a 3-year double-digit OMG stocks are going up feel, is it?
And to support your notion of there being a lack of exuberance, you look at the Deutsche Bank and Goldman Sachs positioning indicators, and they're showing that institutions are effectively neutral. You cannot say that about households, though. Retail investors are max overweight, max all in. You've seen huge growth in margin loan balances. AAI positioning is at 71.2%.
Wow, I didn't know that.
That's back to the
huge.
peak from 2018 and 2021. So households are all in.
So institutions under-own NVIDIA?
Likely, yes, simply because they have positioning size caps. At the end of the day, when you have a market that's so very concentrated and you have certain mutual funds that cannot own positions as large as what some of these names are, by definition, they're institutionally forced to being underweight some of these leaders.
Fixed income was a great performer in 2025. What do you think about the bond market in 2026?
Yeah. So because we're starting this year at lower yields, we're actually in our strategic tactical asset allocations, I should say, actually taking some money out of fixed income and allocating into other areas, simply because you're not getting as much of a return as you were at the beginning of the year, given yields are lower and the strong performance that we've had this year. So we don't think that there's a lot of room for spreads to compress that much further in high yield and investment grade. They're pretty darn tight.
Yep.
But note that they are 30 basis points wider today than they were at the start of 25. So you can, in fact, squeeze blood from a stone.
Cameron Dawson with us. A nice lengthy interview. We're going to continue with Ms. Dawson. Kevin Gordon came in yesterday. Can we take a 45-second biscuit break?
Yep.
Kevin Gordon came in yesterday with Schwab, and he brought in pumpkin honey cookie, and it's all in Korean. I can't understand it. Okay. Here, let's hand these around. The control room didn't want them. They were looking for a full English. I mean,
Lisa, here you go.
Our technical director turned it.
Take one and pass it down.
It's just Kevin and Lizanne Saunders. Thank you so much. That was really interesting. We learned a lot from them, Cam Dawson. At Charles Schwab about this retail moment.
Yeah.
What do you tell retail in a famed Cam Dawson seminar?
Well, I think that the key message is when we think about volatility in markets and as being an individual investor, the most important thing is to make sure that you are not positioned in a way that when volatility eventually does strike, that you are forced to sell positions that you shouldn't. That's the only way to destroy value over the long run. So what that means is not being over-concentrated to certain factors, not having too much leverage, and making sure that the overall allocation is not so extended that if you have liquidity needs during a time of inevitable volatility, you don't have to sell your equities.
One of the things that investors have been talking about is we need this market to broaden out. Do we need this market to broaden out, or can we just kind of live the way we've been living over the last few years?
Well, you do in the sense that the Mag 7 is seeing a deceleration in earnings growth. So we've been in a supernormal earnings growth period. The last 3 years, Mag 7 has delivered 200% earnings growth. That compares to the equal weight at just 18%.
Okay, stop. This is too important. Paul, brilliant. we got double-digit earnings growth coming, but it's all skewed towards 25 stocks, right?
Consensus is expecting that to broaden out. You have this expectation by consensus that equal weight is going to start to catch up, not quite to the point of Mag 7, but close that gap. But the thing is, people were expecting that at the beginning of 25, and guess what happened? Mag 7 surprised to the upside, equal weight surprised to the downside.
Kevin Gordon called in and said, Tom, how is it? And I said, it's a rice cookie. It's a very Korean cookie.
Pumpkin
Cam Dawson
cookie.
On the Kospi and buying Asia this year. Do you buy international? Do you buy Korean cookies?
Well, don't forget that the Korean index, the Kospi, is about 37% made up of just Samsung and SK Hynix. So when you buy the Kospi, you're buying that. But also remember, there's a lot of casino capitalism and speculation that happens in the Korean index. So it has very pronounced boom-bust cycles. So know that you're playing with fire, live by the sword, die by the sword kind of mentality when it comes to trading in those areas.
Do you know that 24 years ago when we were starting this act, that was one of the names on the list for the show? Casino capitalism.
Really?
Yeah, we tried it. We tried.
And it ended up on the cutting room floor.
Yeah, we did. Cam Dawson, thank you so much with NewEdge. Well, seriously, stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
With our newspapers, Lisa Mateo.
Okay, this one is right up your alley because you're always talking about LinkedIn, right? Okay, so apparently more people are logging on to LinkedIn, and it's not just for looking for a job. So if you look at the numbers, so revenue, Microsoft own site jumped to $17 billion in 2025 from $7 billion in 2020. Wow. Membership doubled to $1.3 billion. So what the Wall Street Journal did is they spoke with a couple of people. They said that the reason why is because people like the fact that you have to put your real name on the site. Okay. It says it helps with toxicity, misinformation, scams, things like that. And LinkedIn is saying it's actually helping because people, are more careful with what they post, because a recruiter could be looking or, things like that. There's smarter conversations on LinkedIn. That's what they're saying.
Major shout out. Shonali Basak said to me like 3-4 years ago, he's stupid. Get back on LinkedIn. She was right. Dan Roth saved LinkedIn for Microsoft. And it's just as you described, Lisa, the quality. I can't say enough about subscribing to LinkedIn, not for Tom Keene, not even for Lisa Mateo or Paul Sweeney, for our guests like Tina Fordham. They're all out there. Yeah. Smart, smart, smart.
I do. And I just feel, for me personally, I feel more of a trust issue. Like I trust things better on LinkedIn than
Major shout out, Dan Roth, who did that for Microsoft. What do you got next?
Okay. This is an interesting question that the Journal asked. What happened to happy hour? Okay. Because people are...
You do this for me or for Paul?
People are drinking less. Companies are kind of reeling in those fun budgets, the epic holiday parties, things like that. I remember the time when the boss would come to the bar and just drop down the corporate card.
Sure.
Oh, you do remember that.
And I remember that.
If Sparta's listening,
it was a while ago.
Sparta, could we get Redo, keeper of the Amex, to drop the corporate card?
Not happening anymore. But, people working from home. And then those people who do go to the office, they want to be home early, by 6. In bed early. That's the new generation. They have to get their full 9 hours sleep. So it's a different kind. And what people are saying is that they're missing out on those opportunities to schmooze with the boss or,
All right, this is how it worked on Payne Weber in the 80s.
Here we go.
Our equity trading desk market closes at 4:15 were Hurley's on 48th and 6th.
Got that every day. Every day. And 4 days a week.
And then you get a cocktail or two, then you go to the train and that's how you roll. But or you stayed later. But
I remember the train cars out to Garden City in Long Island. It's a culture gone. And the key thing Paul said is you stop working 3:34, 4:15 or so. Now everybody's ordered on pizza and work until 7 p.m.
Then I went into investment banking and that stopped.
So,
should have stayed on the trading desk.
One more, squeeze it in.
Okay, this one, I'll go to sports. Okay, so the Blue Jays shortstop, Bo Bichette, he's a free agent, right? Okay, so he's getting interest from a lot of teams, including the Yankees, just saying. But a local steakhouse is actually making him an offer to stay in Toronto. They're offering free steak for life.
Ooh,
okay, that's a good sell. That's a really good sell.
That would get my attention.
It's Animal. It's a high-end steakhouse in downtown Toronto. He said it's one of his favorites. And they said, yep, no negotiations, no fine print, just reserve a table, and they will give him free steak for life.
Yeah. He's the kind of player who brings culture and character every day.
Yep.
I mean, he's great, but it's about the attitude as well.
I love
it's like
that
Lisa
on the Yankees.
Mateo. I mean, it's the way she rolls.
Yep.
And he can
Thank you. The newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.